Good morning, everyone, and welcome to this morning's webinar. And we're actually starting on time. Yay, great, that's fantastic. We've actually sorted ourselves out from a technical point of view, with the audio, etc., etc. Although David still can't hear me. A blessing in disguise, I would have thought. Anyway, welcome, and as I said, to this morning's session. But as usual, before we start, may I draw your attention to the disclaimer that I know you can see on your screens. Please, please, please don't ever think of using money that you cannot afford to lose if you are thinking of trading in this market and in any market. And given what's going on at the moment, I would have thought that piece of advice is even more appropriate. I know we have a whole a mixture of people who come along to these sessions. I know we've got some of our forex program students here. We've got I know we've got users of just the quantum trading indicators. I know that some people come along who've just bought the books, and people who've come along who've discovered us you know, through our YouTube videos, my Facebook pages. You know, in whatever category you fit in, you are all very, very welcome. Right, very quickly, how we're going to run this session, to be myself and David, who is actually sitting behind me, and we look at the markets through the prism of volume price analysis. We look at what's going on in the fundamental landscape, the related markets, and of course, markets at the moment are being driven very much by the medical crisis that is, you know, the global medical crisis that is ongoing with coronavirus. The methodology of volume price analysis is all explained in the books on Amazon. This is the digital box set for the methodology that explains it in more detail, and as well as the books, the methodology. David and I have also developed a whole set of tools to help support the methodology, and in particular for Forex, we have some very Forex specific tools, but we'll explain those as we go along. Very, very quickly, just whiz through for those of you who aren't aware of the program. This is where you will find details of the program at Quantum Trading Education, and the indicators, just the indicators themselves, is at quantumtrading.com. The program actually does include the full set of indicators, so it's about 200 hours worth of videos. There are PDF downloads, there are 5 core modules, but it does include the full set of indicators, and you can select for which platform you would like to you would like to have. It's MT45, NinjaTrader, TradingView, and we are working on TradeStation at the moment. I think David's got some TradingView charts up for this morning session. I've got MT5 and NinjaTrader, and I said David has got NinjaTrader and TradingView. Right, with regard to a volume price analysis, there are 5 pillars to volume price analysis, and the inspiration for it, if you like, how David and I sort of came and developed this this methodology, it really was inspired by the work of Richard Wyckoff, and I've mentioned this before in previous webinars and sessions, and I really haven't kind of explained it in any in any detail. I'm not going to go into a huge spiel about the Wyckoffian theory, but it's really important that at least you come away, those of you who are not on the program, come away with the 3 basic tenets of Wyckoff, and there is based on these 3 laws, and the 3 laws are the law of supply and demand, cause and effect, and effort and result. And really the best way to see these laws is to see it on the chart, and David and I are really going to make an effort to show you, when we refer to elements of VPA on the chart, and actually refer them back to these 3 laws, because what they actually do is they frame the chart and they give us a narrative of what is happening what has been happening on the chart, what is happening now on the chart, but much more importantly, what is likely to be happening next. Now, those of you who are on the program will know excuse me, the technical analysis module goes into Wyckoff trends, primary trends, secondary trends, how you interpret a price and volume, to look for a potential trade, to help you stay in a trade and to help you exit from a trade. But as I said, those of you who haven't invested in the program, we will at least give you a taster of what we, of what this very powerful methodology can do for your own trading. And the beauty about Wyckoff and volume price analysis, it is a base methodology. You can then apply, other tactics that perhaps you are more familiar with. You can put your moving averages on there. You can put your stochastics. You can put your Fibonacci's, whatever you want. It's this way or the highway. But what it does, it gives you a deep understanding of what the price action is doing and whether what you're seeing on the chart is actually a genuine price move. If it's a genuine price move, we know it's going to carry on, and we're happy, and it relaxes us, and we can be confident that that the decision that we've taken to enter a trade is it's going to take away the stress that is an inevitable part of trading. And there is nothing stress-free about trading. There is nothing certain about trading. But what it does, it takes away, if you like, the raw edges around that uncertainty and stress. You still have to manage the stress because, when you put money on the line, it is stressful. But at least with this methodology, you will have a clear narrative of what is happening, but more importantly, what is happening next. Now, that's what I've got to say. I will do some schematics to perhaps illustrate those very, very quickly. Save me explaining it in detail for the next time. This is a little series of webinars we put together. We're back again on Tuesday for Forex and Thursday again. Then it's Easter, and then we will come back the week after. As I said earlier, part and parcel of what we've done with the indicators, we've actually developed some very specific indicators for the Forex market. The Forex market is, despite being touted the easiest market to trade, it's easy in the sense that it's very easy access, plenty of liquidity. You don't need a lot of money to start. Hundreds of brokers out there who will offer you a free platform, which is the MT4, MT5 platform. If you want to go to Ninja, you've got to pay for the platform. It is a very easy access market, but in terms of trading, I can assure you it is complex. It's not complicated. And a lot of traders who enter this market think that the easy also applies to the trading. I wish it were, but it isn't. But what we've done is, with the indicators that we've developed, we start with our currency strength indicator, which tells us what the individual currencies are doing. Where is the flow of the money? Is it flowing into the pound? Is it flowing? Where are the strongest flows? And by using them in multiple time frames, we can then get a sense very, very quickly of what the picture is on a daily chart. I've got the daily, I've got the hourly. The currency strength separates all the currencies into the individual currencies. So this is the magenta line, which is the Japanese yen. We can see on the daily it's been falling, and it's been falling because market sentiment has improved. The other thing you have to remember about the Forex market is individual currencies, they have a role within the market. So the Japanese yen is both a safe haven currency and it's a currency of risk. So when markets are, traders and investors are buying riskier assets such as equities, the Japanese yen will fall. Given that we've had two of the strongest up days for equities and indices, it's no surprise to see that the Japanese yen has been falling on the daily chart. Now, things don't fall in a straight line. In the faster time frames, we have seen some trades that are completely contra to that, where some fear has come into the market, whereas the Aussie yen has been moving up very nicely. As we see the Aussie, the blue, some nice moves in the Aussie yen, a lot of buying coming into the Aussie yen as sentiment has improved. Down in the faster time frames, there's been a pullback, there's been a tradable correction in that pair because the sentiment has shifted. Sentiment is very fragile at the moment. We're going to have some good days, then we're going to have some days when the market's going to be rocked quite strongly. Nobody really knows is the bottom in for this recent sell-off. would have to go and look at the charts, look at VPA, and let's see what the charts tell us. But as forex traders, if we know that the yen is correlated with sentiment, that already makes helps to make sense of what is going on the chart. I use the hourly. Now that's the individual currencies. We've then developed the currency matrix, which then ranks the pairs. So for example, if I highlight on the hourly chart the yen pairs, well, where are they at the moment? Well, they're a little bit all over the place. So which tells me that maybe sentiment is not strongly in one direction or the other. It kind of reflects this kind of uncertainty that's out there. Markets would really like to find a base. Everybody's looking for good news. The best news in the world would be that this pandemic is under control. The death toll reduces. The numbers are quite horrific that have been coming out of Italy, now Spain, and then obviously we've got the States. The good news that they will hold on to is if there's going to be some kind of medical breakthrough. We've had the most enormous rescue package in the States just passed, I think passed by Senate, but it's got to go to another vote. It's not a stimulus package, it's a rescue package to help people through this awful time that they're going through. We're going to get the unemployment numbers today from the States. It's going to be how horrible, depending how horrible they are going to be. We've had initial reports out of Singapore to give us an idea of how badly economies are going to be impacted by this virus. Those come in at minus 10%. I think there's going to be some terrible fundamental numbers coming through in the next few weeks and months. And the markets and our life, we're going to have to navigate our way through that. Just on another side issue, I was just from all the from my Bloomberg terminal, it was basically there's been a huge demand in physical gold, which is really interesting. I think the headline saying the rich are all piling into physical gold, and there's a shortage of things like Canadian maple leafs, Chinese pandas, because the refineries are certainly in Switzerland are all closed. So that kind of tells you what's going on underneath. Right. For us traders at the sharp end and at the faster in the faster time frames, this is where most of us spend our lives, as it were. What's actually been going on? Well, I've been looking at the Euro Aussie. It's a really interesting pair for all sorts of reasons, which I'll bring my charts up and I'll talk you through, as I said, how the three laws will apply to the multiple time frames that I have had up. David has been looking at the buying in the pound. There's been some very nice buying in the British pound this morning, some lovely trades. So I'm going to pass over to him. And just a reminder on the fundamental news. The fundamental news now is everybody is really going to see the damage that has been done to the economies, and how what the wreckage that has been wrought by this pandemic. So what we've got today in terms of news is we've got the BOE, the official meeting. As you know, there was a dramatic cut by the BOE down to 0.1. So we'll see what they say. These are the unemployment claims to keep an eye on in the States, and obviously we're coming to the end of the month. But so that's it. I'm just going to pass over to David, and then we'll come back to me with the Euro Aussie. And of course, we're 2 minutes to the London Open, where all sorts of shenanigans normally go on and carry on. So if you always be aware, if you're in a trade and if you're thinking of taking a trade at this time, just before the London Open, you might want to sort of step back a bit and see what actually happens. This market is a 24-hour market, as it said, easy in, easy out, but not at certain times of the day, and one of them is the start of the London Open.